Hello traders, Gary Wagner here, just after 10:30 in Honolulu, 4:30 in New York on Wednesday, 8th day of January 2014, and this is the daily report for gold and silver. Although off of their lows, we do have the precious metals complex under pretty moderate pressure today, with gold trading off about $4 on the day, 1227.40. You can see that as a current print. 1790 is the low and 3290 is the high. As I said, currently trading off about $4 on the day. Silver is currently trading off about 25 cents on the day, the low 1925, the high 1986. Current print 1957. We are now flat in both markets, and we are awaiting a good signal to actually get short this market. With the failure that we've seen, I think that we'll probably see a return to the downside pressure we witnessed last year. I want to start today's show by looking at a half a day standard candlestick chart, 720 minutes. And when we look at this chart, we can see a couple of areas that really eloquently are showing us support as well as resistance. Right now, as far as I'm concerned, our major resistance point is at around 1244, 1245. You can see that as this market came in off of these lows here, this is that point in which we identified the Three River Evening Star Variation just last week. And if you recall, it was this candle with three stars gapped and then the red candle. Now, that red candle closed at approximately 1232, 1233, and the market has been trading lower since then. So we've got to look at it. These are, of course, our short-term resistance points, but we've got to look at that as pretty serious resistance. Now, what could have become support would have been that next number, which is 1227. That's right in here. But we're currently trading just below that. And as the market came up, this is that incredibly interesting day, I should say, where we had the market within a period of a 1 minute time span move out of the range, move $30 lower, and then move back into the range. You can see that here. But as we look at this, even on a short-term chart, you can see that we are definitely starting to get some pressure. And we also see that the candlestick pattern that we identified, that Three River Evening Star Variation, seems to have given us some pretty eloquent information. Now, I turn our attention to our daily chart, and this is in straight candlestick format. We will put it into Japanese average format in just a little bit. But what is pretty clear in terms of this last move, this is on the daily chart, and on the daily chart, we also identified a Three River Evening Star. And in this case, it wasn't really so much a variation, because the only real issue that I had with having this be a straight Three River Evening Star was the size of this red candle. This red candle here was relatively small, but we absolutely have a star gapped in the center. Let's go ahead and blow that up and then maybe move that over. But there's no doubt this is a star. It's gapped in the center, and now we've had these two lower trading days. My sense is right now that the market's probably going to go back and test a couple of key areas, and we'll talk about what those areas are on the upcoming charts. But before we look at the next chart, I do want to convert this back into a Japanese average chart so you can really see the distinction or difference between the two. And now it's been converted. You see it takes a lot of noise out of the market, and you get very strong rallies, very strong sell-offs. And just in terms of the straight candle color, more often than not, you will get straight consecutive green, straight consecutive red. Now, when we take a look at the most current trading activity in terms of our daily chart right in here, we noticed the other day that the body sizes were absolutely contracting. That's the first thing that we looked at. We also noticed that tails were starting to show back up in the market. But now we have this pivotal candle right here, this red candle. And that red candle is typically what you'll see just prior to a drop in the marketplace. The body size gets small, and then it goes from green to red. And that's what I believe we're witnessing now, one of the primary reasons that I believe we could be looking at lower pricing ahead. And we're looking at our daily chart that we have been using for our different Elliott wave models. And as best as I can determine right now, this is my most current outlook. Our long wave 3 comes down, hits that low. That's the 1181 that we touched off, and that was after coming off of a high of about 1435. We go into wave 4, which is an A, B, C rally, and then we begin our 5 count down. 1, wave 2, I believe that we've completed wave 3, and I believe that we've probably completed wave 4. Wave 4's top doesn't go into the area of wave 2. That's one of the most dynamic laws of Elliott wave that you have to follow. If in fact that's how this is going to unfold, and that's what seems most likely, we are now in the final 5th wave of a 5th intermediate wave, and that should bring lower pricing. Again, does that mean that we will have a truncated or what's called a standard zigzag that goes below it? It can unfold still either way, but the key is that in terms of our standard wave count, any way that we looked at it, this is the first time we can make a case for a 4th wave. It meets the criteria. It doesn't go into wave 1, and in fact it looks as though it's lining up fairly perfect. We are back under pressure. Market's trading at 24. I think it's headed lower. Now traders, we're looking at our weekly chart. This has got our intermediate Elliott wave count showing us in wave 5. In essence, our count is looking wave 1, wave 2, long wave 3 down. There's our wave 4. We're currently in 5. Now, where could 5 go to? As I've said before, I wouldn't be surprised to see the market test anywhere between 1161 and 1181. Now, if it in fact holds in that area, in other words, this last wave, wave 5, terminates anywhere between, say, 1161, 1181, we will label this truncated or flat and then look for our A, B, C progression back up. However, if it cannot hold this line, and it's a pretty critical line, the next real level is if we take a look at some of this area here where it was resistance. If it does fall through there, my next real mark has got to be between really 1060 and 1080, but I personally at this point don't see it heading there, but we'd have to determine if in fact it does break below this critical area, which is identified as a 61% retracement at 1161, and realize that that's based upon a tremendous move from about 700 to just over 1900 per ounce. And that brings us to silver. We did get stopped out of our silver trade. My sense right now is that any kind of a counter trend that we saw, there really isn't any kind of real carryover. We're seeing the same thing in the equities markets, where the equities markets got strong again. And as long as the equities markets are strong, it's been my belief that we're going to see the commodity complex as a whole under pressure, but specifically gold. Silver shouldn't be reacting as volatilely if there's a great demand for it. However, it is what it is, meaning that we still are finding ourselves under pressure. The key level is 1958, and we're below that. We're at 1952. The next real level, and the level that I think silver would test if gold goes under pressure right now, is about 1860 to 1872. This has been Gary Wagner, wishing you as always good trading. Talk to you tomorrow for another daily update and review. Bye-bye.